We'll kick things off right now. Super excited to be here. I'm Baxter Lanius, CEO of Alternative Payments, and we're super excited to be partnering with LedgerWay, really around accounts receivable, automation, payment processing. Cash flow is obviously the lifeblood of all small businesses and mid-sized businesses, and really the ability to transform accounts receivable and transform your payments into a growth lever is a theme that we think is super duper critical and important. And so really happy to be here to talk you through it. And hopefully you can pick up some tidbits along the way of transitioning your own processes around accounts receivable, invoice management, customer management. Um, Again, I'm the CEO of Alternative Payments. I founded the company 5 years ago, really because I got intimately familiar with this challenge around accounts receivable. I spent my career investing in small businesses, and every single time I saw the new same challenge, which is, you perform your service, you sell your goods, whatever it may be, but transforming that into cash flow and transforming that into payments was always a really high friction experience. And so I started the company to really make it frictionless. And how do you build a embedded system, an embedded solution into your workflows to automate it? So as you continue to scale, as you continue to grow, you don't have to dedicate resources to this motion. It can run in an automated fashion. We got connected to LedgerWay a few years ago and have been super impressed with the business that they've built and how they view the world the same way. So, couldn't be more excited to kick this partnership off and think about how we can transform both accounts receivable, but also finance for SMBs across North America. With that, I'll just pass it over to Nic.
Yeah, thanks, Baxter. Echo exactly what you said. We're super excited about this partnership as well. I started with LedgerWay in January. I'm currently the COO. Have Big Four previous life accounting experience. Also have CFO experience. So when Baxter and them reached out to officially make this partnership official, very exciting from my standpoint. There's a lot of value that this can add to our clients. And so we're very excited to go through this and see how we can help speed up the AR process for everyone. Yeah, what AR looks like in 2026. I still spend time messing with spreadsheets, right? You have it in QuickBooks or whatever system you're in, but then what do you do after that? You export it, you look at how many days are outstanding, you go client by client, you set up a weekly meeting. Tons of time is spent on chasing down payments, all the little details that go into it, which eventually, like I mentioned, goes into a spreadsheet, and then you just spend a ton of time on it. So one person, two people, people have a hard time answering these questions a lot of the time because you got to reach out to each client individually sometimes because there's always different circumstances that go into play. So I think we can all relate to this slide right here and exactly what it looks like. But eventually, at least from where my previous experience, it goes into an Excel workbook or a spreadsheet, and then you talk through it each week.
Yeah, and the other thing I think on this, Nic, is really this dynamic of invoicing and accounts receivable has always been very reactive. And how do you make it proactive? So, you're not sitting there on a Monday morning meeting saying, well, what happened over the last month or what happened over the last week? But you're sitting there on a Monday morning meeting and you're saying, well, what was automated? And now where do I need to spend time? And transforming that relationship, I think, is what's really critical. Because as you mentioned, every single business in the world goes through this process.
Yeah.
And it's always this dynamic of, well, as the question on the right says, how much did we collect this week? Where are our invoices or where are our receivables? And again, taking a more proactive approach to cash flow management, payment processing, accounts receivable, oftentimes will solve this pain point.
Yeah, agreed. Agreed 100%.
And one of the things that I'll also emphasize, if folks have questions, feel free to just drop them in the chat, or send them directly, and we'll certainly address those as they come. Or we also have save some time at the end for Q&A. So listen, Nick addressed this a little bit, but there are a bunch of these core problems that we still see in the market. And Nick mentioned this before, right? Everybody's managing invoices via a spreadsheet. They're going in either week to week or month to month or day by day and saying, well, what's been collected? What hasn't been collected? Um, what's the next action step for your customer? What's the next action step for this invoice? They're going and logging into their bank account. Did Nick pay me? Do I see that ACH? Do I see that wire? They're going into their credit card processor. Did we receive that bucket of deposits? Or they're going to their mailbox, right? Was the check received? Hopefully, this envelope that got sent to me is the right check. Maybe they're using a lockbox solution. But again, all of these challenges are really just core problems and friction-full problems that we navigate. And that doesn't even pertain to the cost of payment processing, right? So credit card charges 3% on average. American Express is oftentimes a little bit more expensive. Time value of money with check processing, right? If your client fills out a check, mails it to you, how long do those funds actually take to hit your bank account? And so, we think about this world as really twofold. One is, what are the systems? Where is the friction from a systems perspective? Those are mostly kind of qualitative components of accounts receivable and payment processing. And then there's the quantitative piece of it, right? Which is days sales outstanding, credit card processing, time value of money, cost of banking. And, the key question, that we asked ourselves when we started the business and also when we thought about partnering and talked to LedgerWay about partnering was, how do we come up with a solution and a software platform that solves both of those problems?
Yeah, and I'll say too, Baxter. I mean, when you started off talking about all the processes and all the other um, stuff that has to be done, is it's very manual. Like even though you have an ERP system and you have this nice Excel file, there's a lot of time and energy that goes into, following up, checking the bank accounts, like all of that stuff. So they are process in general for almost all businesses is very manual. Not to mention the cost side. Like saving on the cost side is a whole nother dynamic that goes into this as well. But you can also save on the cost side by reducing manual labor, to free up your employees to do other things.
Yeah, it's one of the big misconceptions that we see whereby people are using QuickBooks Online or QuickBooks Desktop or Xero, or they're using an ERP solution. And they oftentimes use these solutions thinking that they're going to solve the AR automation component. But what they realize is AR automation is a whole different sort of software solution and different sort of complexity in relation to that. And we have a lot of customers who come to us and they've just transitioned from QBO to NetSuite as an example. And they're like, wait, I thought NetSuite did this, right? Like I thought this was a solution that was included in NetSuite. And what they realize is that, sure, NetSuite does certainly offer certain components, and QuickBooks Online offers certain emailing components, but from an automation perspective, they're not solving all of that manual labor, all of that time investment. And that's really where we see a lot of value.
Yeah, I think that first box right there speaks exactly to that. It's a system of record. It's not a system of action, right? And so solving for that is, alternative payments has done, as we'll see later in the presentation, a very good job of kind of bridging that gap.
Totally.
Oh, next slide. This is my favorite, cash flow. Uh, Previous CFO life, collections is, and cash is the lifeblood of any organization. And, if you're not getting paid, you don't have cash. So DSOs are super important. How can we reduce DSOs? I mean, that's a conversation that every single CFO, controller, accounting manager has, if not on a weekly basis, definitely on a monthly basis, because you want to be able to, you want to plan. I've got a big vendor who needs to be paid. Well, is X, Y, and Z going to pay me this week? Like, I don't know. So having more visibility into that is key for any organization. And then not to mention, you get into, somebody's 90 days over, 100 days over. Am I going to have to write this off? Am I going to have to send a demand letter? I mean, there's a ton of time that is spent from CFOs and executives discussing legal action, discussing, well, who's going to call this client, who's going to get on the phone and talk to John or talk to Baxter. It's like, hey, I need to get paid. What's going on? I mean, it's very, very time consuming. But it all goes back to, we want to get paid in a timely manner. And depending on your industry, I mean, everyone wants to be paid before 30 days. I know that. But if it goes 45, 60, 65, 75, 90, I mean, you start to get worried as an organization. And then it's hard to cash flow planning. Like that's key in every organization. So this slide really, really relates to me, and being able to solve for some of this would help any organization.
Totally. And listen, these are a lot of the quantitative components of what is the impact of not getting paid quickly, right? And so day sales outstanding is a cash flow constraint challenge. One of the statistics that I love is, for $1 million business, $1 million revenue business, if you're able to accelerate 30 days of cash flow, it has close to $100,000 impact on your business. Now, you always need to look at the numbers, and if your invoices are net 30, you know, maybe you can get them down to net 30 and get paid on the 30th day, but you certainly should not be getting paid on the 45th or 60th day. And how do you accelerate those invoices? And then bad debt is obviously a big one, because at the end of the day, if you're providing services or providing solutions to your clients, and then you have to write off that invoice, there's also a cost of service. So, that's a huge negative impact to your business.
Yeah, I mean the cash flow can help you pay down debt sooner. I mean some companies do AR factoring where they get the
Totally.
front and at a discount, and that's a huge cost for companies. So yeah, I mean the cash is king, as everyone always says. And when you're planning or running a business, it's even obviously it's everything. Yeah, I'm a very visual person, and I'm glad Baxter and them added this. This is what it's all about right here. I mean, you're with QuickBooks, you've got fees that aren't going to change. I mean, it's credit card processing, ACH, all of that stuff. As the more transactions you do, the more you pay, which everyone is familiar with that. But if you as you can see with alternative payments, there's a delta there, which is a good thing. And so that's the overall one of the overall goals, not only to having more insight and being proactive, but reducing the monthly cost is, I mean, that's real.
Yeah. And one of the big opportunities that we see, and we're always very transparent with this, is ACH processing is one of those things that costs payment processors next to nothing, but they upcharge it significantly at the invoice level. So, whether it's QuickBook Payments or other processors, typically they're charging between $5 and $25 per payment. And alternative payments charges $0 on the ACH side. So there's a question that Steve, I think, mentioned that was from one of the guests, but the question is, how much money can we expect this to realistically save us? Again, the devil's in the details, in terms of, how much are you paying for software solution today? How much are you paying for credit card processing? How much are you paying for ACH processing? Are you surcharging your clients on the credit card side, which is a big opportunity that we'll talk about shortly? But generally what we're seeing is you can save 20 to 30% on your payment processing just by switching to alternative payments. And then that doesn't include any of the incremental benefits of, automation workflow, of decrease in day sales outstanding, decrease in bad debt, which also frees up additional cash flow.
Yeah, what you said, devil's in the details. It depends on the company and the transaction level, but at the end of the day, how I look at it is there's an opportunity to save money, which frees up cash flow to do other things with. So that's fantastic.
So we talked a little bit about this earlier, but this kind of really hits the nail on the head. And Nic also provided a lot of different examples from the CFO seat or the controller seat in terms of how we look at or how most businesses run accounts receivable. But generally, the left side kind of summarizes where we see most small businesses and mid-market companies. Invoices are sent manually. Invoices are constantly being chased after. There's an Excel spreadsheet that kind of gets sent to the AR clerks or collections team or controller or CFO on a weekly basis. And then they're going in and they're following up. Hey, Nic, this invoice is due tomorrow. Have you paid? Checks are obviously a big time suck in terms of the manual processing of cash. So not even including the time value of money, but typically industry standard would say that it costs about $14 just to manually process that check payment. And so checks, we see a lot of checks in B2B payments. Right now in the industry, still 33% of the industry is processing payments via check, which is crazy and crazy to me, but it's just the facts. And then we see credit card fees really eat into the margin, right? So if you're, as a business owner, absorbing all of your credit card fees, that's typically a 3% cash flow impact hit to the bottom line. Cash is oftentimes stuck, right? I think average day sales outstanding across all industries is 35 to 40 days. In some industries like distribution, industrial, manufacturing, it can be even 60 or 90 days. And many of those businesses then use AR factoring, as Nic mentioned, to try to accelerate, but they're obviously paying a significant cost for invoice factoring. And then the fourth bucket, which oftentimes goes unnoticed, but is one that we think is a massive opportunity, which is manual reconciliation. So you send out an invoice, you don't exactly know when that invoice is going to get paid. Is it going to get paid via check? Is it going to be paid via ACH, wire, through your card processor? And then you're going into your bank account, or you're going into your mailbox, or you're going into your credit card processor, and you're trying to manually reconcile that payment back to your source of record. So back to QBO or back to your invoicing solution. And that's a big time cost and time sink. And so where does this take you, and why did we build this company to solve this problem? Is really in relation to those pain points and how do we solve them. So, we view alternative payments as a single pane of glass, one layer, one system, where we manage the invoice distribution, invoice following up in an automated fashion, which we'll get into. We manage payment processing. We allow you to surcharge your clients. And our system results in getting you paid much faster. So in days, not weeks. Typically, our customers see about a 70% reduction in day sales outstanding, which is awesome. Lower processing costs on ACH because we don't charge for ACH. Credit card fees, we typically allow you to surcharge your client and pass those to your clients in a very simple fashion. And then we automate the reconciliation process. So because we're integrated into QuickBooks Online or NetSuite or Xero or QuickBooks Desktop, we see those invoices, and then as those payments come in, we mark those invoices as paid automatically. So that's a really, really nice solution that again save you hours. There's another question here that an audience member asked, which is sometimes end clients are adamant about using a credit card because it gives them points or rewards. Is there a way to convince them to switch to ACH, or do we just eat the fees and make them happy? Um, my first reaction would be definitely try surcharging your clients. So, if they want the rewards and the fees, then they can have the rewards and their fees, but you're not going to absorb the credit card costs. You're going to implement a surcharge to them of say 3%. Typically that becomes then a deterrent to use credit cards. And so that user will then transition to ACH as a payment method. We also see a lot of businesses just make this a policy across their entire customer base. So, as an example, my insurance company is a big insurance company called Chubb. In the fall of last year, they sent out a notification to all their clients. If you want to pay with credit card going forward, starting on December 1, you can, but it's going to cost you 2.99%. And what did that do? That just made me migrate to ACH. I didn't really complain. This is oftentimes a point that's high friction for businesses, and people get really concerned about what the customer perception is. But oftentimes we see that the perception is actually not reality, and people typically just migrate to ACH. Across our entire book of business, 80% of payments are via ACH, and only 20% of payments are via credit card because of this surcharging and cost to process dynamic.
Yeah, I mean, the good thing is businesses won't be the first to do the surcharge, right? I mean, I think we've all run into, whether you go to a restaurant or something else and they're like, hey, it's 3% to run your credit card. And if you don't have cash on you or whatever, you eat the 3%. So that's the good thing. But I do really like, I think we're hammering home the nature of AR and, where this solution can take businesses, which is, not only on the cost side, but, just getting rid of the manual function that is AR is a huge benefit. And, in my mind as an executive, I mean, it's the future. So I'm super, excited to see the rest of this because this is good stuff.
So yeah, so now we'll transition to a little bit more about alternative payments and kind of where we fit in the market, and then we'll also talk a little more about our solution specifically. But here's a little bit of an overview. Listen, we're very, very focused on services-based companies, but also support other industries. We support over 1,000 businesses today. We process in the low billions of dollars. We have about a team of 100 now that are focused on this. About 30%, 35% of our team is all about product development. And so we take clients' feedback extremely seriously. We implement it very, very quickly to ensure that you're getting the best experience possible, and we're solving those gaps. One of the things that's always critical for us is what are the pain points that you're having, and can we solve them, right? So if it's how do we convince your clients to adopt ACH over credit card processing, we will literally provide you templates of emails that have worked for other clients. If it's surcharging, by specific customers, we've built a feature that allows you to do that. And again, it's all about understanding the workflow, automating the workflow, and simplifying the process for you and your business. As I say all the time, we wouldn't be successful if it weren't for the outcomes that we deliver to our customers. And we are extremely outcome oriented, and we measure the success of our product based off of these outcomes. And so if you look across the board, our North Star is how quickly do we enable our clients to get paid in. And we've been extremely successful in reducing days sales outstanding by 70 to 80% as they adopt alternative payments. And so our average collection time is around 5 days. That is really driven from payment automation. So how do you get customers on autopay where their credit card or their bank account is on file? The invoice gets sent out. When the invoice is due, we're just running the ACH or we're running the credit card, and then we're remitting funds to you. And again, that accelerates accounts receivable tremendously. And that's one of the kind of core features that drive this day sales outstanding down. And you can control it by customer, you can control it by invoice type, you can control it by SKU. So again, it gives you the flexibility and the functionality to really customize it for your specific business. We are very human capital oriented, which sounds funny for a software company, but it's something that's been successful in our model, which is how do we partner with your business and with your company to solve your problem around days sales outstanding, around invoicing, around payment processing. And our customer base has been very, very receptive to that model. And, we've received very, very high ratings accordingly. And then the other big piece is how are we saving you guys time and money? And can we automate more of that manual process? We talked about sending out invoices. Some companies are still sending out invoices via the mail, following up on those invoices, structuring autopay, getting payment methods on file, running those payments, running those invoices, and then automatically reconciling those invoices. As we think about where we're building and what we're building, ultimately we see a much bigger opportunity. And that opportunity is really twofold. One is, how do we allow you to communicate with your data in a more seamless fashion to unlock bigger opportunities and growth opportunities for your company? So for example, if a client has been on autopay for 6 months, but in month 7 turned off autopay, does that actually provide you a signal that that customer is about to churn? If the customer has a credit card that's expiring, we can notify you and automate the email distribution of that to the client. And so this basically starts to change the game around reactive accounts receivable management to proactive accounts receivable management and automating of those work streams. And so that's really, really exciting from an LLM and an AI perspective. We also are building an analytics layer, which allows you to track days sales outstanding over time by client, who's using ACH, who's using credit card. So this reporting layer, which you can distribute, a CEO report or a customer health report to your team, to yourself, whoever, on a weekly basis, daily basis, at a specific hour, again, to transition your thinking around this process from reactive accounts receivable management to proactive accounts receivable management, so that you can also see the impact that we're driving. And then the next piece of the puzzle is financial automation tied to accounts payable, right? So accounts receivable is a big, big pain point. Accounts payable is also a pain point. How do you manage your vendor spend? How do you manage your customer or your vendor contracts? How are you paying those vendors? And how do you tie accounts receivable with accounts payable, again, in a fully automated, AI manner? So, again, this provides you a little bit of examples of what can an AI business intelligence layer do for you across your financials and across accounts receivable, to flag opportunities to run a much more streamlined business. The majority of companies today are doing this via Excel. They're doing this on a piece of paper. They're doing this using QuickBooks Online or NetSuite reporting, which really isn't great. And what we've built is the ability to capture opportunities in an automated fashion. And so this solution can run daily, weekly, monthly to, again, understand what is the current state of play within your business and what actions should you take to drive stronger cash flow or drive a reduction in days sales outstanding, obviously, which are the outcomes that you're trying to drive. So, couple things that we provide, right? This like weekly CEO report. Again, you can customize this and the way in which you want to. This kind of like CFO advisory on demand component. So you don't have to weigh down your team to ask for that analysis on a weekly basis. And it may take a team member, 3 hours to pull together. We can run that automatically and flag opportunities to you and your business and to your team to take action, or we can even take action ourselves. Again, we talked a little bit about credit card pass-through, but this slide really simplifies what the experience looks like and how you can control it by customer and by fee. Because one of the big opportunities that we see, taking that $1 million revenue business or a $10 million revenue business, if 100% of your invoices are being paid by credit card, you're paying between $30,000 and $300,000 for credit card fees. That's not really a cost of doing business. That's just a cash flow impact to your company. And if you can start to migrate 10% of those payments to ACH or to surcharging customer credit cards so that you're not absorbing it, again, that's a massive, massive amount of savings. And so we've built this functionality in a really, really customizable fashion, which allows you to customize it by client as well as by fee. So, to begin with, there's always this question of, well, people want to pay via credit card, and how do we have that conversation and engage with those customers? Some customers may not be challenging to deal with, and so you can obviously just automatically implement a surcharge. Some customers may be a little bit more challenging, and so you then offer up, well, let's split the surcharge, which this allows you to configure. And then some customers, maybe you say, listen, I'm worried about them churning, or I'm worried about them going to another service provider or another business owner, and so I don't want to surcharge them at all. Again, this allows you to customize it in the flavor and the fashion that you feel like is best for your business. As you can see on the credit card side, again, we make it super transparent as to how do you want to, what does your client see? So they see the fee. That fee also gets fully outside of the reconciliation window. So again, you don't have to reconcile that fee, which is also another really, really big challenge that business owners have, where you're constantly reconciling 30 cents, or you're constantly reconciling the 2.9%, again, makes it really, really challenging to manage. We eliminate that management component for you specifically. And then what you can see, obviously, is just a streamlined ACH payment as well. So, ACH, there's no surcharge, there's no fee to you, there's no fee to your end client. Credit card surcharging, obviously can be on your client side as well. The next big opportunity that we see is really automations. There are really two forms of automations. One is obviously just email notifications. So how do you want to communicate to your clients on a daily, weekly, monthly basis? What do you want those emails to say? What do you want the frequency to be? How do you want them to be delivered? How do you want those invoices or those emails to show up? Do you want the invoice to be attached? There's a lot of intricacy with, I'm sure, how all of you guys are managing your businesses. And we've built, again, a very customizable solution to fit within your requirements. You can summarize invoices as well. So you don't just need to send a single invoice or a single email invoice to your clients. And then you can also do one-off campaigns. So think about it as like a MailChimp or an email client for you. Maybe you want to run a campaign to drive people to pay via ACH and set that up for your clients. Then how do you automate that through our platform and remind them that, this is the new way to pay? So again, we try to think about the entire holistic process of accounts receivable management and collections and how do you embed that into this experience? Um, the second big opportunity is autopay. So which clients want to be on autopay? They can control it themselves. You can control it on their behalf. Do they want to implement a minimum or maximum of invoice that can be charged to autopay? Do they want a specific SKU that can be charged to autopay or a specific service relative to other services, right? Some clients, and I see this with myself a lot, which is, hey, yeah, I do work with LedgerWay. LedgerWay, you can charge me up to $5,000 a month or up to $10,000 a month, but anything above that, I want to manually approve. And so how do you configure a system that will automatically autopay for up to those limits? But if there's an invoice that's $12,000 or $15,000, you would have to manually approve it. And so again, you have that flexibility and that functionality to streamline these workflows and processes. Another really, really great component is this end client facing portal, which is customizable and branded to your business. And we see this all at the time where, I'm paying a vendor and I don't even have a history of what I've paid the vendor, or I'm required to maintain that history with our controller at our own business. And it makes it really, really hard for me to understand, well, what am I paying for and how much have I paid these people in the past? And so typically I'll then go back and I'll say, well, I just received this invoice, Nick, can you please help me understand the history? Which then sucks up a ton of time from Nick and his team to get to the bottom of, invoices, what payments were made, what payments were not made. And the idea really is to make this as self-serve as possible and be able to deploy a self-service portal and payment experience very, very quickly so that your clients can self-serve and get the actions and the requirements that they need. So, this end client facing portal is fully branded to your business. You can see the payment history. You can add credit cards, bank accounts. You can change them. It notifies you if cards are expiring. It notifies you of overdue invoices or failed transactions or disputes. They can come in here and add different team members. So if there's a billing contact that they want to manage and they want to ask, they can manage that. They can obviously also manage autopay. So, hey, I want to, screw this. I can't keep manually making these payments. I want to log in up to $5,000. I want to be on autopay. Everything above that, I'm going to log in and manually pay. And this portal is basically an extension of your brand. So think about it as pay.yourcompany.com. It's a subdomain of your URL. We see a lot of our clients create a payment button on their website, which again, reduces all the friction to getting paid and streamlines that workflow as much as possible. Now, we haven't stopped there. Another angle that we're focused on is collection. So we obviously are not delusional. We know that not all invoices are able to be collected, and dealing with collections agencies is really, really challenging and high friction. And so we've embedded that collections agency in this experience to streamline the workflow. So all of your invoices that are over 30 days overdue, they would get synced in here, and then you could decide whether you want to submit them to collections or not. You obviously are not required to, but you can decide maybe after day 60 or day 75, or maybe a client told you that they're not actually going to pay. You can submit it automatically to a collections agency. We charge 20% if the invoice is collected successfully. And so this is, again, another just feature and opportunity for you to streamline that workflow, and you don't even have to deal with the collections component. We deal with it, and then we automate the system accordingly up until legal action. And so we have an agency, they'll send mailings out to the client, they'll call the client, they'll try to negotiate on your behalf to collect those payments. And we've seen just a tremendous amount of success with this solution. Although obviously it is challenging, because if they don't want to pay you, then they obviously may not want to pay us either.
So Baxter, real fast to clarify on this. So when Nick goes into this module, you can send it to a collection agency from there, or does this start the collection kind of bucket for your 20%, I guess? I guess I'm just a little more clarity
Yeah,
on.
this sends it directly to a collections agency from here. So we've built an embedded API connection to a collections agency. When Nic logs in and he wants to send this, invoice to from Graham Wendover for $1,000 and click submit to collection, that would automatically shoot that to a collections agency, and
Gotcha.
then they would start their process. Typically that would get a letter out to the client in 2 weeks, so that the client is then receiving a letter in the mail saying, hey, you've been sent to collections. This is a delinquent invoice and we may take legal action if you do not pay it. So again, trying to think about the full cycle of
Yeah.
accounts receivable management.
Yeah. Yeah. I mean, getting some money is always better than getting no money, but collections agencies in general are expensive. So, um, anyway, yeah, I was just curious on how that works. That's a great functionality, honestly.
Yeah, and listen, what we've done, right, is we've bundled um, our entire business with this collections agency relationship, and then we've passed a lot of the discounts to our customers. So generally, what we see is 40 to 50% cost of a collections agency if you're just sending a single invoice, because it's not recurring business for the collections agency. But with us, we're sending hundreds of thousands of dollars of invoices every month to collections, and so we bundled that relationship and then offered our clients the benefit.
Yeah, I mean, that's a big deal, honestly. So yeah, this is really cool. I know we've been talking a lot, but I didn't realize you guys offered this. So yeah, this is super useful and saves you money if you get paid. So
Totally. Sorry, I skipped over a question here from somebody in the audience. How long until they're up and running with alternative payments? Will invoice reminders be automated, payments automatically processing, etc.? And what if you're already using a different payment platform like QuickBooks Payments or Stripe? Can you migrate customers' data? So we have a full onboarding workflow. As part of joining alternative payments, we would set up an onboarding timeline for you with somebody from our customer success team. We have about a team of 12 in customer success, onboarding customers every single day. Generally, what we see is, you know, most companies would probably say, hey, it takes a minute. It doesn't take a minute. It takes some time to get right and ensure that, we're communicating with your clients to the way in which you want to be communicating with your clients, and making sure that that is a thoughtful process for your business. So typically we say it takes 30 days. If you send out your invoices on the first of the month, then we would work backwards and we'd start 30 days before that. We'd set up your email reminders, your email summaries. We would do a payment migration from your existing provider. So we'd take all of your data from an existing payment processor, we'd migrate it into the platform so that every single one of your customers has all of their invoices synced in, all of their customer data on file, and all of their payment methods that they've used historically on the account. We can even duplicate autopay rules if you've been using autopay previously, so that once the first of the month hits, you can then just press go live, and everything would then just take action based off of that. And so that streamlines the workflow significantly and creates the littlest amount of friction for your end clients, which obviously is super important and is always the big concern around moving payment providers and moving into a new system. So with that, listen, really appreciate everybody's time. If you guys have questions, please share them. This was really, really great. Um, you know, as we've said before, and we've hit on it a couple different times, but listen, the ROI is real. We have a tremendous track record that we can share with you, even more details around how do we reduce day sales outstanding, how do we reduce payment processing fees, and then how do we save you time on manually reconciling, sending out invoice emails. and that entire workflow. We couldn't be more excited about partnering with LedgerWay. Nic and his team have been amazing to work with. I'm sure you guys love their services, and we're really, really excited about this partnership. We've included a 10% discount for any LedgerWay clients who join alternative payments. And again, we'll make sure that that onboarding workflow is as streamlined with working with your LedgerWay team to, again, drive continuity, reduce any disruption, although it is a pretty streamlined process. If you're interested in booking a demo, obviously you can click this QR code or visit the website, alternativepayments.io. But again, Nic, thank you so much for your time, and couldn't be more excited about kicking this thing off.
Yeah, big thanks to you and your team, Baxter, for putting this together. We're excited as well. So hopefully we can offer this to our clients and create some value. So appreciate you guys.
Definitely. One other question that just came in, someone said to me, which is, does this integrate with accounting software we're already using? So we have a laundry list of integrations. One of the strategies for us has been, how do we create the most integrated solution for you to reduce friction and allow you to get up to speed as much as possible? And so we integrate with QuickBooks Online, we integrate with QuickBooks Desktop, we integrate with Xero, we integrate with NetSuite, we integrate with Business Central, Microsoft Business Central, we integrate with Sage. There may be a few others that I'm forgetting about, but again, those integrations are critical. They're two-way syncs, right? Which means that we pull your invoices into our system, we process the payment, your end client logs in to make a manual payment, and then we reconcile the payment back to your accounting software. Again, automating that reconciliation process. That's really a core functionality that we see saving the most time with an accounts receivable. But thank you for that question, and wanted to just address that before we jump. Again, if anybody wants to shoot me an email directly, my email is baxter@alternativepayments.io. And really, really excited about this. And thank you guys for all your time, and have a great rest of your day.